A bull versus bear on Bajaj Housing. First off, with regard to growth, there's been very solid growth that Bajaj Housing has seen on its AUM portfolio, 72% CAGR till FY24 in terms of AUM growth compounded annually, and the current growth also continues to stand at 30% plus. Well, the flip side of it, you have a 1 lakh crore book now. So can you continue to sustain that kind of growth? Not so sure. And as the base keeps increasing, that will be tougher to come. That 30% kind of number, not sure if that can sustain. Also, increased competition as penetration continues to increase. But the other focus is definitely profitability. Well, Bajaj Housing has stronger yields due to the top-up loans that they offer, but with it also comes higher risk. As of now, you're not seeing that risk translate, but if that would translate, you could suddenly start to see the bear case on that start to play out. I'll stick to asset quality even on my next point when it comes to construction finance. In terms of growth, construction finance is something that Bajaj Housing will likely lean on to continue to push growth because it's chunkier loans, right? And therefore, that increased reliance will also come at an increased risk. But what Phillip Capital seems to be suggesting is they will grow it only at 8 to 10%. That's what they are building in their numbers. Mind you, Phillip Capital has expected the balance sheet to double in 3 years. So they are also expecting growth at 25% and likely not 30+%, just for context. Last off, with regard to valuations, Phillip Capital has given this a target price of 210, while it is also the most expensive housing financier already. On day one itself, it was the most expensive housing financier. Why is that so though? One of the reasons for that is that the anchor lock-in leaves very little room for liquidity in the stock. The anchor lock-in largely comprises of 4 to 5%. Mind you, the promoters haven't diluted in a big fashion. They continue to own 89% of the company. And therefore, the free float is extremely small. In fact, when you look at the NSE, the number of shares available, or rather demanded by investors, is roughly 2.5 crore shares, whereas there are no sellers on the NSE, at least on this stock at the moment. Also, the bull case, as per Phillip Capital, they have assumed 210 to be the price basis, a price to earnings multiple of 30 times, which is 30 times. They've come to basis a 20% discount on one standard deviation higher than Bajaj Finance's price to earnings multiple. And that's what they've really taken as the number. Therefore, that's how this plays out. Just in terms of price to book, here's some context. You look at Aptus, which is probably the second priciest in terms of housing financiers, and Bajaj Housing standing tall, twice of that in terms of price to book valuation. So something to take from all of this, I hope.